Hey everybody, Joe Malone here, coming to you live on Dallas Trading Floor. So hopefully you can see me out there. I had a little bit of a technical bandwidth issue. Wow, hopefully we're going to get these things sorted out. But this is Dallas Trading Floor number 143. So it is definitely the market has been strange. It's kind of moving somewhat sideways. It isn't really responding as well as we'd like it to. I don't know. It's hard. It's just really hard to, it's really hard to say, kind of the way it is. But I just put out an action trade alert that was how I did a trade on Fastly. And Fastly is a great stock. It's moving up very nicely. It moved up very nicely today. So it's definitely the kind of thing you want to see out there. So it's pretty interesting. It's pretty interesting as it goes. Let me see if I can come down a little bit on the. Yeah, see, I'm at too high of a resolution. So let's see if I can come down. There we go. I was broadcasting I didn't have enough bandwidth to broadcast at 720p. So I'm down at 480, back at 480. So hopefully that'll be better now that I've done that. So thank you for bearing with me. Let's get to it. Just wanted to show you the slides that I have prepared for today. Basically, here we are. The Russell 2000 seems to be doing pretty good. The Russell 2000 has moved higher, but the small caps are leading. The big caps, where all the action has been, they're kind of lost in the shuffle. So it's definitely a mixed picture today. We're bouncing off the 50-day. I just kind of want to show you this. We are in a confirmed uptrend still, though, which is great. We're up 108. We're actually down 108 today. It's pulling back to the 50-day line, so it just seems to be going sideways into the election, and that's kind of the deal. The S&P's off. It's as well as the Dow Jones. So we're just not getting the love there. So we're not getting the love that we need to see in this. The spider has pulled back a little bit below the 50-day. There's some selling volume, but it's not as high as we'd like it. It's up 1%, but not huge. Just kind of moving sideways there. $3.55. The key level on the spider right now is about 335. So it's right on this 50-day moving average. So that's kind of what's happening. The programmatic traders are pulling back to that line. This was the high here, of course, and we've been moving lower. And then, basically in September, at the end, third week of August, we started pulling up. We've pulled up through the 50-day moving average, but then we're pulling back to the line. So it looks like it's just kind of hanging out at the 50-day moving average right now. So that's kind of where it is. Also wanted to show you the QQQ. The QQQ today is at 276.25. This is when this slide was taken. And by the way, for everybody that's watching on TikTok, super easy to see what I'm doing. Just jump on over to YouTube. It's youtube.com/Dallas Trading Floor. And we're over there. And we're showing all the charts. Anyways, the Invesco QQQ Trust pulled back to the line, and the volume is down. So it's very weak all the way around. It's just kind of coalescing on this 50-day moving average. So that just seems to be kind of where we're at here. Now, I did want to bring up a interesting trade I made today, and these are actually the numbers that I made them on. And the stock is Fastly. It is a Cloud King, as I guess Jim Cramer would say, because he's much more famous than I am. I'm nobody, but he's a pretty big guy. But anyways, it's Cloud King, and it's a very interesting chart. It's got a flag chart. I want to show that to you right now. I put that out on the action trade alerts. And by the way, the action trade alerts are super easy to get. All you have to do to get the action trade alerts are go to the site, www, Dallas Trading Floor, and then I will show you that in just a second. But that is, that's where they reside. So here we go. This is a high tight flag. As you can see, it's coming up here, and it's high and tight, and it's moving up higher. Now, this is a trade I just did today. I bought 100 shares of Fastly. The price that I bought at was $102.83. I then actually sold a call option. This is the October 20th call, the 110 call for $500. So this gives you the option profit and the whole thing. So basically, the return on the options is almost 5%, which is excellent. And the return on the upside is about 7%. So if everything goes right and it closes on the, it's October 23rd. If it closes on October 23rd above 110, Fastly does, then this is the profit that will be made. So about $1,217, or about 255%. And by the way, those are totally available on the Action Trade Alerts, and super easy to get those. All you have to do is go over to DallasTradingFloor.com. Right there, the address is on the screen, Dallas Trading Floor. And by the way, if you're at home, you can get on the Action Trade Alerts. Super easy to do. All you have to do is go to my profile, click on the link, and you'll be taken directly to the sign up page. So without further ado, here we go. This is my current holdings. I wish they were better, but this is what I've got. I've got Oracle, Taiwan Semi, Tesla, Sorrento Therapeutics, and Fastly. Well, Oracle and Fastly are going up, but not so much with Tesla. Tesla seems to be in this trading range from about 407 on up to about 424. I sold yesterday. I sold a call option on this again. It's a little bit longer in the future. I've got about $40 for that. So that was pretty good. That was out into November. We have essentially, everybody, a sort of a sideways market. So what I do is I like to buy the underlying stock and then wait for an uptick and then sell that call and then take that money. So that's how I'm doing it anyways in this market. There's different ways to trade different markets, and this is definitely a very slow market in terms of the in terms of how how it's trading. So that's just kind of one thing I want to really bring out there. Now, in order to get the trade alerts, super easy to do. Just jump on over to Dallas Trading Floor, and then it looks kind of like this. This is how the website looks. I probably should put my face on there. I don't know, or maybe the little trading guy, but I haven't done that yet. Anyways, to get the free trade alerts, just first and last name, your email address, hit that subscribe button. It's totally free, of course, and that brings it to you there. And also, if you want to see the small portfolio, this is live time is how I'm trading. That's another, you put the first and last name, email address, hit that submit key, and boom, you're on that list, and it's totally free. So that can be a very good way to go. So we have some comments waiting. Thank you all for hanging out with me. How did you get started? Well, I got started basically about 20 years ago, I'd say. And I worked for a guy very, very shortly, and I wanted a salary, and I was a Mr. Salary guy, and I was in there, and I was saying, you should pay me a salary, and we should expand. He kind of took me aside and said, you know what? I really don't want any employees. I'd prefer not to have any employees at all. I just want to, have my little business and do my little thing. And he introduced me to the Investor Business Daily. And I said, well, what the heck is the Investor Business Daily? And why should I be interested in something like the Investor Business Daily? Well, the reason I should have been invested is because it is a great resource, and it has allowed me over the years to make some very interesting trades. Now, I didn't really pursue it as much as I should early on, but I kept coming back to it, and there you go. And basically, what got me started was a book that I read, and the book was by William O'Neill. Now, this is in the 4th edition currently, and this is available on the website, DallasTradingFloor.com website. But this is the orange cover here: How to Make Money in Stock, a good A Winning System, Good Times Are Bad. And this truly is a great book. And it is part of the CanSlim system, of which I am a trader. I trade in the CanSlim system. Now, there are many very, very famous traders that use the CanSlim system. Can't say that I'm famous. I'd like to be, but I'm not famous. But the CanSlim system by William O'Neill, this is really something else, and you want to definitely, take a look at it, because it is something that really, really will help you. And it's available on the site, www.DallasTradingFloor. Just go over here to the Learn to Trade bookshelf, and you can find that super easy. So anyways, that is sort of how I got started anyways in this. Trump tweets no stimulus. I lose $1,000. You love to see it if he has serious. You know what? Well, okay. Well, a lot of the uptrend has been factored in. It's going to be a tough negotiation towards the, towards the election. I don't have, unfortunately, I don't have any inside information on that at all, on the stimulus. I do know, though, that it has made a difference for a lot of people. Here's one of the great things about the stock market and trading stock is that even though we were totally shut down during this whole period, I was just trading my little stocks right along, and I did extremely well, and you can too. So it's not that hard. But we're in a different world today. We're in an online world, and everybody talks a game about making money online and all this stuff and affiliate marketing, and that's all great. I do some of that as well, but where I make most of my money, to be honest with you, is trading stocks, and you can do it too. It's super easy, and that's what the show is all about, is trying to help out, trying to kind of show you what I'm doing to make money online right now. And I make money trading stock. It's just that simple. There are other things you can do as well that are great as well, but trading stock just tends to be a winner, especially here. The most important thing, though, is you have to learn how to trade in the different markets. That's why I spend so much time talking about the direction of the market. And every morning I try to, well, every afternoon, every morning for me, I try to show the market direction. Right now, the market is going sideways. So how am I trading? Well, I'm employing covered calls, and they're helping me. I'm buying the underlying stock, and then I'm selling the right to buy it back for me at a set price, but people are paying me cash. Now that's for a sideways market. In an upward trending market, I'm using calls, I'm doing all that kind of stuff, but we're not in an uptrend trending market. We're in a sideways market right now. And when the market turns lower, then I am shorting and doing things like that, or buying the SQQQ. So depending on the market direction, up, sideways, or down, there's a way to trade the market. And that's just really pretty much it. So let's see. Hey man, thanks for showing. Thanks for your thought on Datadog. Datadog's a pretty cool stock. It's been doing great. So let's open up the charts and see what we can find on Datadog. DDOG. So let's put it up there. Okay. Wow. Okay. Wow. We're right above the buy point. We're at a good level. We're at a good level. Looks like Datadog is making some nice moves here. Now, typically on an IPO like Datadog, I don't want to be in that IPO until it's come at least 3 months. Well, we're definitely there. We're definitely there. It's much longer than 3 months, but this has a typical IPO base, kind of moving up. It's had 1 cup, 2 cups, and it's really on the third base pattern. This is a consolidation, and looky, we have a very nice buy point on a consolidation base, the second stage base, 98.99. It's 103. So we're right in the buy zone right now. They're right in the buy zone. So I'm going to put that out there. It's DDOG buy point. And that equals, let's see. Yeah, that equals 98.99. So let's put that in, 98.99. Did that go in there right? Oh, okay. Oops. 98.99. So let's put that out there for everyone. By the way, If you're looking at me on TikTok, super easy. I'm actually doing a chat here. I have a chat from everybody coming. Unfortunately, the chat doesn't work for TikTok. It works for YouTube. It works for Periscope, which I'm on, and Twitch, but not unfortunately for TikTok. Unfortunately, so I'm putting the buy points in the chat. Just if you can easily see it by jumping over to www.youtube.com/Dallas Trading Floor, and this is episode number 146. Just so you'll know that. Okay, so that's Datadog. Datadog's looking pretty strong. 97 relative strength. This is looking good. Let's look at the thing. We have increasing fund ownership. Definitely like that. Let's look at the checklist. Is excellent. 8 out of 9. 6 out of 9 is my minimum buy, but this has got 8 out of 9. The industry and sector, I want to be in the top. Yes, it is. 14. Excellent. This is just really good. Let's look at the ownership in the funds. And this is a very important. Fidelity Contra Fund is in there. Whenever Fidelity Contra Fund is there, by the way, that's a good housekeeping seal of approval right there for Datadog. So this is looking pretty good. Now let's look to see if we have sales. Yeah, we have increasing scales. This is something we want to look at very carefully. We want to look at sales. Looks like they're up 68%. Wow, this just gets better and better. And we have a spike up here. So yeah, we have a very strong buying activity. This is definitely in a buy zone. If you don't put this on a watch list, this is at least, I would go in probably with a full position on Datadog. This is looking very good into the end of the year. So, but remember, if you do go with a position in Datadog, please put your stop loss in. And I would put my stop loss at the 50-day moving average, which is 85.77. So what I would do if I bought this right now at 103.63, which I think is a good buy, I would put my stop loss. I would put my stop loss right about 85.77. And why? Because that is where the 50-day moving average is, and if it pulls back to that. So the rule typically is if you don't have an average or something like that, it's going to pull back to the rule is basically set your stop loss at 7% down, or multiply it times 0.93. That'll give you the number, or the pullback to the 50-day moving average, which in this case for Datadog is 86.38. So great stock. This is definitely one that is looking very, very strong. So let's see. Somebody take away from Trump and Musk, please. I agree with you, man. It's this has happened to me several times owning Tesla. Everything's going along, everybody's getting excited, it's working, and then somebody like Elon gets on there and I think the stock is overpriced, something like that, and then it just goes collapse. Wow. That's the thing. Elon Musk is a genius, but he's sort of socially inept in a lot of ways. And that's just kind of proven out when he does these tweets. I hate to say the same thing kind of goes for Trump, though I think with Trump, he's more trying to provoke people. So, and it does seem to work. I mean, he seems to get things done. So who knows? So let's take a look at Tesla, because this is the great Elon Musk. I've tried to kill the golden goose. We're at 314. I do think we're pulled right back to the to the 21-day line. The 21-day line's 418. That's why I'm selling calls on this, to be honest with you. That's why, because it's moving upward. The trend is good, but these calls or these things are creating this thing. So, I mean, I really can't put it any other way, but let's see if everything has maintained itself. We do have increasing fund ownership. I really like this. And Fidelity Contra Fund is in there. That's really good. Let's look at the checklist. The checklist is not as good as I'd like, but it's basically still in there with 6 out of the 9 criteria. I'd like to see it better, but 6 out of 9 is definitely good. No question on that. Let's look at the ownership. The ownership has been increasing by funds. And everybody, I just want to tell you, what does make a stock go up? Well, one of the things that make a stock go up is increasing fund ownership. And we definitely have that with Tesla. Even though there's a lot of retail investors in there, 37% of it is owned by the fund. So I'm still bullish on Tesla, but let's see if we have anything in there. Yeah, blah, 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 blah. Okay, well, okay. And on Trump, I can't really speak to that, unfortunately, with Trump. I wish he wouldn't tweet as much, but then again, it's how he communicates directly to people. I mean, a lot of the people, a lot of the news people seem not to want to carry his stuff. So by tweeting, he gets just does the end run around them. So there you go. Oh, I tried to get on your emails, but sorry about that, Kevin. Super easy to do. Let me just kind of show you where you can do that. It's real easy. I'm going to show you the website. Just go to Dallas Trading Floor, and you should be able to. Here's the thing: if you can't get on the email list, and it's not going out to you. This is how the email list. This is how the website looks, and this is where you put it in: first and last name, and then the email list. You've probably done that and hit subscribe. You've probably done that. But if you could, so if there's a glitch in here, and I can maybe fix it, go to this one where it says "Ask a Trading Question." See this red one here? Just push that. Put your information in. I'll get you taken care of right away. So thank you for putting that out on the screen, so that I should be able to get you taken care of. And of course, it's all free. So thank you, Ken. Let's see people on the talk. Now, hopefully, TikTok is going to continue on. That's one of the reasons I'm in Oracle. So hopefully, it will be going more. The BPF, still lots of upside left. Well, let's look at BPF, see if we've got some upside there. BPF. Oh, did I get that right? No. There we go. BPF. Come on, baby. No. BPF. I'm the king of fat fingers. Symbol not recognized. What do you know? Well, I'm sorry about that. Sorry, but let's take the next question on TikTok. Let's see. Check out this stock site. What do you think? Okay, I don't know what that is on there yet. Oh, wait a minute. Oops. Let's see if I can find. I'm joining Robinhood. What is your advice for a newbie? My advice for newbie is Robinhood's okay, but you're probably going to get much better stock execution if you go to TD Ameritrade at tdameritrade.com. But Robinhood is good. And so my advice for a newbie, basically out here, is to first, and it seems like, why would you want to, I know when you start trading stock, you just want to jump in and go right to the stocks. But before you start putting money down, I really recommend you looking at a book. And of course, this is the book I always recommend to everybody just starting out. It's one I read initially. It's called How to Make Money in Stocks, A Winning System, Good Times or Bad, by William O'Neill of Investor Business Daily. And it's available on my site. I would love it if you buy it on my site, because then I can keep all this thing running. It helps me defer some of the costs. I make most of my money trading, but I do, the website and all that kind of stuff. I want to expand the educational offerings, and this helps me if you do buy the book off the site, How to Make Money in Stocks, A Winning System, Good Times or Bad. That's the one you want to start with. And the second one, this is a really good one. I would buy both of these, the blue cover one too, by Matthew Galgani, Making Money in Stocks Getting Started. The reason is this gives you action lists that you can do right away, and that is excellent way to get started. So that's kind of my advice, for what it's worth, on getting started in the stock market. Let's see. Anyone else having issues? I probably are. I hope I can really cover that. Hopefully I will get my stuff going right. So sorry about that. Trump put the kibosh on the stimulus until after the election. It seems like a sudden drag in the market. Nah, I don't really think so. There has been a lot of free money coming out there, that's been a thing. But the stock market has moved up. It's correcting right now. and I'm not too afraid. That's one of the reasons why. That's one of the reasons why I'm not looking. I'm not looking to see a lot more stimulus coming into the market because of just basically they've kind of put a lot of stimulus in there, and it's I think it's done at least for a while. And I want to kind of take a look at again at the spider. Let's take a gander at the. Let me just pull up the research here for the spider. And the reason I look at the spider so much is because this is the S&P 500. And it tends to be very, it tends to give a very good view of sort of, where the market is going. And I always start with the weekly chart. And so let's look at the spider as it just kind of give an analysis, sort of a little bit of a idea of where the market may be heading. You can see this is the big coronavirus drawdown, and we are basically headed up, but we have bounced off the 50-day line. We are above it. These are weekly bars, by the way. This is a weekly chart. So we are right hugging this 50-day moving average. So that's what I expect, at least into the election, is for us to hug this 50-day line. And that's kind of what's happening. The stimulus wasn't to have a perpetually moving higher stock market. It was to stabilize the economy so that it wouldn't down. So we have to be careful, with with expecting too much. Thank you. Got the alert, jumped in. I think you're going to do good on Fastly. Be careful, as Fastly moves up. I do think we're going to move. I think Fastly is going to move above 117. By the way, I do believe that. But here's the thing with Fastly: keep moving your stop losses up. Keep moving your stop losses up. That's very, very important to do, because with Fastly, it is being acquired by a lot of funds right now. But we want to be careful. Set those stop losses at 92%. So wherever you bought it, multiply that times 0.93. That's going to give you a number, and put that in good till cancel. Please do that, because you never know, it can pull back. But I do think we're going to see some nice movement in Fastly, and I did a covered call thing as well on the on that. So yeah, I think we're going to do very, very well in Fastly. So hopefully you're successful on Fastly, and I think you will be. So that's a great thing. What do you think will happen to the market now that Trump has nixed the stimulus? I think it'll go sideways. I really believe it. I really believe that the market is trading sideways, and that's why I have changed my trading style. Instead of kind of moving with the momentum of the stock, I am basically, what I'm doing is I'm buying stock and then I'm selling calls on it and taking the cash in. This is a little bit different way. Selling covered calls in a sideways market is the way I trade sideways markets. And I do think we're going to be sideways until the election, at least until the election, maybe and afterwards too, because we've got to digest. It's kind of like we've got to digest all this upward momentum. Where the stock market went from March 23rd up to basically the end of August, that was very unusual. The market typically does not move that quickly, that fast. So we've got to kind of digest it a little bit, and I think we're going to go sideways a little bit. We're going to stick on that 50-day moving average on the on the spider. So that's what I think is going to transform. But we can make money in sideways markets too. In a way, I sort of like sideways markets more than the other ones, because I think they're easier to control your trades. What do you think will happen in the market? Okay, I think it's going to go sideways for a while. All right, take a look at Apple. Apple, one of my favorite stocks. The problem with Apple right now, and it's not a forever problem. It's a right now problem. The Apple got a little bit ahead of itself, and when it did split, then we had some issues. So Apple is essentially mirroring the QQQ, which is basically the overall market. And I want to kind of show you the chart on this. So right now, we're probably not going to see as much upward momentum on Apple. We're still good with a relative strength of 92. That's excellent. But as you can see, it's basically just hugging this red line here. And of course, that's the 50-day moving average. So let's see if we have a fund, how we're looking with the fund. Here's the issue that I have right now with Apple. It has fallen below my buying criteria. It's only 5 out of 9 of the William O'Neill checklist. And the reason I use this is because it works, not because, I think William O'Neill is, as you'll see, I talk about him a lot. I think he's one of the greatest traders in the last 30 years. So, but anyways, he had this criteria. There's 9 criteria on here, and I typically like to see at least 6 of these pass. Unfortunately, we're not in that case, and part of the reason is we are somewhat off the high. We're over 15% off the high, and our sales aren't as accelerating as much as I'd like, and we are not accumulating as much on the funds are. So this is an issue. I think this will come back. This has just got ahead of itself. But right now, if you're looking to get into Apple, I would say put it on hold. If you have good money in Apple, you might want to consider, let's say you're up 20%. I don't know what you are. You might want to consider possibly taking some profits at this level, just because it's going to be a little bit slower until the new iPhone stuff comes out. So 113 seems to be the buy point. It just seems to kind of stick right there. So with Apple, probably not. It's probably not the play. Now, if you do want to do, there's another play coming up on a stock which just came out of the blue, and that is, believe it or not, McCormick. McCormick. You remember those guys with the spices? You go to the grocery store and there it is. Well, it looks as if McCormick is going to be gonna split. So let's look at that split schedule. And what this is that when stocks announce a split, typically they follow a very defined pattern, and so you can actually trade this. And I actually put out action trade alerts on both the stock splits for Apple and for Tesla. And typically what will happen is they typically trade up when the announcement happens, and then they trade down a little bit, and then they move up into the split day, and then you sell it right before the split day. And that typically will give you some good some good stuff. So where you can find this? Well, I could find it's super easy. Just go over here to Yahoo Finance. Yahoo Finance is the place to go, and it has the split schedule, so we can see what stocks are splitting. Now, most of these stocks are junk, and you don't want them, but some of them are very good. So let's look, here. Let's look for, out here. Yeah, not really anything that I'm interested in, with the exception, of course, of this company called McCormick. And McCormick seems to do well. So let's look at the chart for McCormick. McCormic, I think it is, stock symbol. All right. So hopefully if I spelled that right. MKC. There it is. I didn't get it right, but let's look at MKC right now. Oops, MKC. Now, why would I pick a spice company when I'm basically a momentum investor that invests in technology? Well, this company is doing fairly well. It's called McCormick and Company. Everybody's seen it out there. It's been out there forever. It's trading at 190, 177, and it has announced a stock split. So in December, it's going to split 2-for-1. So let's kind of look to see. Well, it's 6 out of 9. I'm liking that. Let's look at the fund ownership. It's actually increasing. Imagine that. Here's a non-technology company where the funds are increasing. So they have some very good things going on. So let's look at the industry and sector. Well, this is a kind of a bummer here. It's 144 out of 197. So I typically don't like to buy in this sector, but I'm going to put it on my watch list because of this stock split. The stock split really is it is kind of a cool thing. So basically, why would you buy this? Well, it just seems to keep on. It just seems to continue to do well. So basically, what's happening here is we're going to get a stock split, and typically what happens is into the stock split, you will see the stock move higher, and then you sell it right before the stock splits. I will have more on this, of course, on the action trade alerts, and it's super easy to get on the list to get the action trade alerts. You just go to www Dallas Trading Floor, and you'll see it on there. And also, if you're watching me on YouTube, I really would appreciate if you would go to we're on stream. Okay, now we're on. Yeah, okay. I really would appreciate if you do go to YouTube, Dallas Trading Floor, and this is the most important, and give us a big like. See that? Yeah, give us a big like on that on the YouTube. So, anyways, that's kind of my shtick for today. Anyways, so back to the questions. All right, so I wish I could see you too. Okay. Well, you can, by the way, you can see exactly what I'm looking at. It's no problem. It's www Dallas Trading. It's www.youtube/Dallas Trading Floor, and this is episode number 146. So you can easily see what I'm doing. You can't see it on TikTok, but on YouTube, definitely you can. So there you go. All right. So and ACM, thoughts on AMC? Ooh, AMC. I just don't think that you want to be in this. I remember when AMC one time was the greatest thing out there, the greatest. For full disclosure, my first job when this is like back, when dinosaurs were ruling the earth, because it was so long ago. But I actually, at one time in my life, was a projectionist in high school. Yeah, I was a projectionist. I actually worked at a place called McLean Cinema in McLean, Virginia. It's no longer there, of course. And, I thought, wow, if I could get a job at AMC, that everything will be right. Well, that was then, and this is now. Unfortunately, a little thing called Netflix came along, and nobody's putting out movies anymore. And so AMC is just a kind of a sad story. Look at this. It's not the kind of chart you want to buy. It's going from the upper left-hand corner to the lower right-hand corner. Now, why would somebody bring up, and I'm not trying to chide anyone here, but the reason people think, well, I can buy it, it's a bargain, it'll come back. Don't bet on it. Don't bet on it, because the world's changing. I don't think it will, and I'm afraid it's got a relative strength of 18. There's just so many better places you can make money in this market. And, unfortunately, AMC is not one of them. So let's kind of look at why we don't want to buy this bad boy. First of all, it fails for the most part on the buying criteria. It's only 3 out of 9. Remember, we need 6 out of 9 typically to buy this thing. It's got 3 out of 9. So that's not so good. Fund ownership. Well, guess what? The funds are starting to abandon this bad boy. This is a potential short, but it's so cheap at $4.05. There's not very much more it can go down. So this is just looking very, very sad in all directions. Let's look at the industry. Well, the industry is fairly good, but unfortunately, the leader in the industry is not AMC. The leader is Netflix. So, ouch. Not a good time to be in. If you have this thing, please do yourself a favor and sell it. Sell it and sell it fast. I mean, it just doesn't work well. Why did Nasdaq fall 1 through? Well, because a lot of people are selling. That's why. That's why the Nasdaq fell. Unfortunately, because a lot of people are selling. There's just no conviction in the market. So that's why I have to be very careful right now about stock selection. We've got to be extremely careful. We got to have a little bit higher criteria than we would normally have, and we kind of got to be in the stocks that are going to work in this kind of market. So, all right. What is the right time and price to buy Nike? Very good question. Nike is going to do very well. I don't know if you know this, but Nike is going to change its distribution model to basically 100% online. I just think this is amazing. This is going to be one of the first. They're the largest sports retailer in the world, so they're going to come into this in a big way. Just want to show you. There's a blue dot on this, which means that this is in a very, very bullish buying area. It's right now in the buy area, but we can see that. Where would you buy this thing? Well, let's look at the first level. The first level Buy point, it's at 104. Of course, we're beyond that. That's off of a cup base. We have a profit taking alert on it right now because it has moved up over 20% from the base, which is 104. So it's moved up. It's, you know, it's probably many people that bought at that base are going to be taking profits right now. It has 6 out of the 9 on the checklist. It's going to be a little bit tough to buy it at this level, just to be honest, but it looks like there has been a little bit fewer. Some people are selling it. Their Fidelity Contrafund is in there. I love to see that. So where would I buy this thing? Well, if it's tough to buy this, I would try, the only place really you could buy this is at the 21-day exponential moving average, and that's 125 at least for today. So it's not an easy buy. This is more of a watch list. Let's see if it forms another base pattern. I don't think it will, but just it's a great stock, just not a good place to buy it right now. That's the main issue. You know, that's the main issue with it. It's just a hard place to buy it. So, oh goodness. All right. So sell off on the way. Yeah, no. I mean, actually, sell-offs could be very good, especially if you do covered calls, because they typically make that. There's a sell-off, but I don't think it's the end of the world. I just think it's moving back to that 50-day line. So that's my opinion of it as well. So you know, as you are in the market longer, you'll see these cycles. You know, a lot of people have only been on the first cycle. It's been going straight up since the coronavirus thing. You know, we're going to be moving. You know, we're probably going to be moving a little bit sideways. That's just the nature of the beast. So you can definitely make money in this market. So that's the main thing. So let's look at no stimulus. Do we wait until election? It's time to be cautious. It's time to be in cash a little bit. We are in a confirmed uptrend, though. We are in a confirmed uptrend, and I just kind of want to show you sort of how I'm, I'm in my small portfolio right now. I'm half in cash, and I will show you the how I am trading it right now. You notice how I'm 50% cash, and then basically I just have I'm basically flat for the day. I mean, I'm Oracle, Taiwan Semi, Tesla, and Fastly. That's about it. That's it. So I'm only 50% of the market. So that's kind of how I'm going to look at it, at least until the election. So I do think that we are going to move kind of sideways. So we want to kind of have our powder dry on this. So that's how I am trading it. By the way, that site that you just saw, it's super easy to see that. But all you have to do is go to my website, dallastradingfloor.com, and that's right here. And to get on that list, so I'll send you out the link. Make sure that happens. Is you need to put first and last name and email, and then just hit that submit. It's all free, and you'll be getting the link to how I am trading the small portfolio. So that's how that is going. So let's see. Let's take another question from TikTok. ACM. Let's look at ACM. See if I can give you any insight on ACM. ACM. And we are coming up hopefully here in a second. Wow, it's got a slow connection today. ACM, is that working? Okay, it's thinking about it. ACM. Okay, this is in Los Angeles. It's okay, so it does have a buy point. Looks like it's a nice consolidation. Let's just take a look at it. With ACM, it's trading at 44.12. There is a buy point on it, but it is not. We're below that. The buy point on it is 46.73. It's a 18-week cup. It seems like it's almost getting ready to move into a buying stage, but it's not there yet. So let's look at the checklist. It's okay. 6 out of 9. This is the minimum that I require to buy. Let's look at the ownership on funds. We definitely have very good fund ownership. A little bit off this time. There is a mutual fund in it, so we have some good we have some good ownership. There's one concern: it has negative cash flow, and it's in sort of a consulting business, so it does that. That's a little bit worrisome. 63% are owned by funds. That's very good. And we do have some strong buying as well. This is a watch list. It is not 80 is my minimum relative strength for buying it. It's at 81, so that's pretty good. This is a watch list. I wouldn't buy it at this point. I just wouldn't be in it because it is just not at a level that I think is going to be optimal, and that's just the main thing. So, but it's definitely one of those. How often do you increase your stop loss? For example, on the upward trend of stock apps? That is a great question, by the way, Dinesh. Here's what I do when I first start out, and I probably should be producing some videos on stop loss management because I find it very helpful, because I don't watch the screens all day. I can't. I mean, I'm doing other things. So I put stop losses in there. When I start out, I always put in a stop loss at 93%, which is 7% of potential loss. So if you buy the stock for 100, you multiply that times 0.93, that gives you you put your stop loss in at 93. Now, as the stock moves up, I then adjust it up. So am I always 7% off? No. What I will do is I'll typically adjust it up to where the 21-day exponential moving average line is. And what do I mean by the 21-day exponential moving average? Well, let's look at apps to see kind of where that is. APPS is the symbol. So bring that up. And that's Digital Turbine. By this way, this is a great stock. Very, very good choice, by the way, on this. I'm not in this, but I'm watch listing this. And I do like this. I do like this company a lot. If you can see, I don't know if you can see it on this, but there is a little green line here, and that's a 21-day moving average. So what I do is when I buy it, I will buy it, and then I will reset that stop loss right to that 21-day line, a little bit below it usually, so that it can bounce off of that. And that's how I do it. I keep it moving it up. So this is brought up a really good point here, Dinesh. Thank you very much for this. This is a great stock. I think you have some very, very good insight on this. Digital Turbine is doing great. It's let's look at the fund ownership on it, and it is increasing nicely. It's at it's at 281 funds. That's good. I'd like to see Fidelity Contra Fund in there, but it's still excellent. Excuse me. We have got excellent ranking out of at 197 different sectors. It's a 14, so that definitely passes. The checklist is excellent, 8 out of 9. It doesn't. The only one better is 9 out of 9. So this has just got some very, very nice things going on here. Now, where could I buy this? Well, unfortunately, the last pivot on this was a consolidation way back last year at about $7.84. If you bought it then you would be doing great, because it's 35. It's basically gone up fivefold. Now, where can you buy this? I think the only place you can really buy this is at the 21-day exponential, and that would be about 3207. So I would buy this. I'd wait for this to be on an update, but on an update, I would probably be in this. This is really good. It's got very nice fund sponsorship at 37%. Typically, when a stock moves, its best is when the stock moves from about 20% to about 40 or 50% fund ownership. That's when it starts to push up. So a lot of funds are buying this. This is excellent. It's got a lot of nice criteria. Thank you very much for that. And I'm going to put that down, APPS for watch list. And that is great. I'm going to put that watch list on the small portfolio, because this is an excellent stock, and it definitely should be on the watch list at the very minimum, possibly a buy. So thank you very, very much. Okay, so next question. In search of follow finds. Okay, well, yeah, I was probably in search. Okay, so let's take some more questions from TikTok. All right. Hello from Gibraltar. Wow. I've never been to Gibraltar. I've always wanted to go. I'm very interested in small countries. This is just a side. Sorry, I had to give you this. I've been to Malta, which is excellent. I've also am looking to go to the Cayman Islands, but I've never been to Gibraltar. It's one of the last crown colonies in the world, of course. Hong Kong was at one time a crown colony, and it's no longer part of China now. But Gibraltar is still a crown colony along with the Cayman Islands. So very, very interesting place. Hello from Gibraltar. Thank you for watching. I really appreciate it. And by the way, if you want to see this, all the charts and everything that I have, super easy to do. Just go over, just go over to youtube.com/Dallas Trading Floor, and we're episode number 146. And by the way, if you're on TikTok and you want to sign up for my free action trade alerts, it's super easy. Just go to my profile, hit the link. You'll be taken directly to the sign up page, first, last, and email, and hit that submit button. And of course, you will be on the list. And of course, it's free, and you can unsubscribe anytime you like. So it's sort of how I'm trading, and that's how I do it. Anyways, okay. Why the sell-off this week? It's really a correction. Now, because we did correct, really, remember, from the end of August, we've been correcting down. We're down more than 10%. It's bounced back up to the 50-day moving average, and now, of course, it's backing off a little bit. So it's basically, we had a retest of the bottom. Actually, the real bottom before the stimulus was on March 23rd on the spider, and that was 211, and it didn't pull down nearly to that. It basically pulled down to about 300. So, that was the first test. We may bounce up and may move lower again after the election. Who knows? But right now, without the stimulus, with the uncertainty that the election is bringing, and of course that's going to happen, hopefully, and we're hopefully going to get through this. And then once that uncertainty is lifted, I think that it looks as if the market will go higher based on what I'm seeing. But remember, after the election, it's going to be tough because a lot of retailers are not doing well during this COVID thing, and unfortunately, we have a lot of states that are punishing the people that live in them by not reopening. It's kind of sad. I mean, California, my home state's doing this, and it's really hurting the economy. Same in Illinois and in New York. I think one party is thinking that they can hurt people enough and they'll vote the right way, at least the way that they want them to vote. I think there's a little bit of that. There's just a little bit of animosity. So hopefully, once the thing is over with, we will be through that and beyond that nonsense. And I really do think it's kind of nonsense. Wow, I have been jabbering here for almost an hour. It's 52 minutes. So let's see if we have any last questions. Oh, we have a question on AMD. Thank you very much. Thank you. Thoughts on Apple? Okay, wait a minute. Let me see if I can. Let's see if I can. Okay, I caught 50% made a cool. Yeah, right on. Do you use a Bloomberg terminal? No. No, I do not. Bloomberg terminals were a thing about 20 years ago, kind of like Quotron. I actually use something called MarketSmith, and I actually use I have a direct feed into the BATS, which is actually in Kansas City, and it's probably the best exchange that you've never heard about. And it's basically what it does is that it has real-time pricing at the secondary level in the market. So it's a very, very good real-time source for quotes, and I definitely have it on. So my quotes are basically on the BATS at real time, and I can go down to basically a minute. So it is a little pricey, MarketSmith, but I've definitely made money on it. So I do recommend it. By the way, if anybody wants to kind of get started in the canceling method, of course, there's the great O'Neill book, and I showed that a few times. But also another great way to go is the IBD digital edition. I think it's only like $20 or something like that, and it's a little bit abbreviated, but it has a ton of stuff on it for very good trading. I do recommend that. Now there are other free sites like Yahoo Finance. That's where I got started, and it's excellent too. And it costs you zero. It costs zero money. Now I should be getting a commission from the Investor Business Daily, but I pay just as well as I pay the same price that everyone else does. But it's a great service, so I can't complain too much. I've made money with their software. What do you think about Fastly? Well, I love Fastly, and as so everyone knows, full disclosure, I did have a covered call play. This is a part of my uh, my action trade alerts that I put out today, basically, and here it is. Basically, this is Fastly. This is a trade I made this morning. I purchased 100 shares of Fastly for $102.83 each. So I put out a fair amount of money, and then I immediately sold a call option. This is an October 23rd call option, basically 17 days from now. And I sold that for $500 because that was the market price at the time. I think it fluctuates a little bit. So if Fastly closes above 110 on the 23rd, well, then I will reap this profit. Why? Because that option will be exercised and I will sell that. So I'll make a upside profit of about $717. And the option profit, which I already have in my bank account, of $500, so about $1,200. Or if you annualize it, about 255%. So that's not bad. And as you can see, this has a high tide flag. This is a very, very bullish signal. It's got the cup here, but then it's got this flag. And this flag is what you want to see. If you get these high tide flags, this is a very, very bullish symbol. So that's why I did Fastly today. And I have it in several accounts. It is also in the small portfolio as well. We did buy it for the small portfolio. So very, very good stock. Really, really think you'll do well on it if you're in it. Any thoughts on Lithium America? I haven't really been concentrating on the lithium miners. Here's the thing about lithium. I realized that Tesla did make a buy, and of course it's important. It's an important component in the batteries that they have, but the main component is cobalt. So that's really if you're looking to correlate, the prices, you want to look at the miners that are mining cobalt. And if you're looking at the gold miners, I think that that's also a place that we might want to we might want to look as well. Is some of the gold miners. So let me just pull up a bunch of gold miners that I think are interesting, and gold is one of them. It's Barrick. Everybody knows Barrick. It's probably one of the biggest. I like if you're interested in the gold miners. Right now, the price of gold has pulled back a little bit, but I do think that we might see some more interest in the gold miners. It's pulled back. The buy point on this right now, off a flat base, is about 31.22, currently trading for 27.06. Now, let's look at the buying criteria. You know what? This is 9 out of 9. So I do think that this might be a good alternative in this kind of weak market where we're having weak movement up. I do think that by the end of the year, we're probably going to see more demand for gold, and Barrick Gold is definitely one of the good ones. If you look, their relative strength is 86, which is excellent for a mining company, by the way. And you can see that each quarter pretty much for the last 2 years, they have been increasing profits. So that's a very, very good sign too. So if you're interested in mining, I think that you might want to look at Barrick Gold. The symbol on that is GOLD, and the funds in it are about 48%. So let's also look at the funds to see if we've got increasing fund ownership, which I like to see. Yes, and we do. Isn't that great? So we're moving up in terms of the number of funds, and this is very important. In the mutual funds ownership category, we have Fidelity Contra Fund in here. This is where you want to be, folks, if you want a gold stock. You want to see that Fidelity Contra Fund. This is a big vote of confidence here. And I think you're not going to make a ton of money on this initially, but it's going to move up very nicely. So that's something that you might want to look at in terms of a kind of a hedging strategy, would be GOLD, which is Barrick Gold. So a very good, very good alternative for I recommend, by the way, everyone, you listen on television and everything, and they talk about, how, you should buy physical gold and all that stuff. I don't believe that. I think you're better off buying a gold mining stock, a quality gold mining stock like Barrick or possibly KL. But, Barrick has just been so strong, and the price is very good, about $31. So that's a very good potential, at least for the next at least in this uncertain time. And and how long will we be in it? Who knows? I don't know, but it won't probably be that much longer. But this might be a good time to look at Barrick Gold as opposed to and some of the other ones. Well, thank you very much. I have been on now almost for an hour, and I will be back tomorrow at 2:30. I hope that everyone is doing okay. If you want, of course, to get onto the trading list, super easy to do. All you have to do is go to the website, www.Dallas Trading Floor, and sign up for the action trade alerts, first and last name and email address. Hit that subscribe button, and it's totally free, and you'll be on the list. And of course, you'll be receiving my trade, how I'm doing some trades into the future. So till then, I will see you tomorrow.